And we've got this matrix here where we've got skew on the, very similar to what we showed you in that quadrant diagram, where we were like saying levels of skew and levels of vol. So here we've got the skew on the x-axis, the vol on the y-axis, and we just plot where the vol and skew are for each asset. So you can see here that commodities are generally sitting with a call skew because it's 0 is here. So if put and calls had the same vol, it would be there. So being in negative means the call vol is higher. So your commodities generally sitting in call skew. We have equities generally sitting in put skew, and you have some stuff trading around neutral, like Nikkei, China, bonds, FX, whatever it may be. But this, so you can just see on the map where it is, and you can see if it's moving around. So we do this every single day, every single week. We see where these things are moving around. Where do they normally live? Have they materially kind of displaced from where they normally would be? Because again, there is a bit of mean reversion in a lot of this stuff where it kind of heads back towards where it normally lives. And also, where do they live relative to each other, right? So some of the relatives that I often look at are, I look at gold vol relative to FX vol to see like maybe, you know, where is Aussie dollar vol relative to gold vol, how, and some of these emerging market FXs, like, you know, that gives you a sense where the gold vol is pushed up too much or where it's trading too cheap or wherever it is. Looking at TLT versus S&P is a relationship I sometimes keep an eye on as well. You know, all sorts of things, gold versus gold miners, that's a relationship as well. All of these things, keep an eye on them, see how these, it gives a feel for any relative value trading opportunities that there may be. So that's a matrix that we obviously have as well.